Hi, everyone. Welcome to the Sustainability Story. I'm Deborah Kidd, Director with the Global Industry Standards team at CFA Institute. And I'm so pleased to have with me today Sean Kidney, CEO of the Climate Bonds Initiative, an international organization working to mobilize global capital for climate solutions. Sean is a member of the European Commission's platform on sustainable finance and was a member of its predecessors, the 2017 EU High-Level Expert Group on Sustainable Finance and the EU Technical Expert Group on Sustainable Finance. He's also a member of green finance committees in China, India, Mexico, and Kazakhstan, and a professor in practice at SOAS, University of London. So, Sean, thank you for being here today.
Thanks for having me, Deborah.
It's a pleasure.
This is our second go.
Yes, it is. We met back in...
For listeners, 10 years ago.
That's right. We first met in 2014 when I heard you speak at a CFA Institute fixed income conference in California. And then I interviewed you for an article I wrote on green bonds called Indexes Sprout Up as Green Bonds Take Root. And at that time, I'll share a couple of statistics with our listeners. In 2014, the green bond market was $40 billion. 10 years ago, in 2013, there was one corporate green bond. And you and I were talking about there's no standard definition of green. There is a unique risk to green bonds called greenwashing. And Climate Bonds Initiative had begun issuing standards for environmental integrity in projects and assets that are used to certify bonds as climate certified bonds. Today, I just looked at your most recent semi-annual report. There are more than $4 trillion in various types of climate bonds, including green, social, sustainability-linked, and transition bonds. And you've just issued version 4 of the Climate Bond Standard. And for listeners who aren't familiar with the standards, do you want to take just a minute to talk about what they are and what it means to be a climate certified bond?
Sure. So one of our projects is, I'm going to call it definition. What is green? Because it's complicated. Like once you get beyond solar energy, what about this agriculture investment? Is that right for the future? And this is becoming material because the world is changing. Climate is in. As well as governments are beginning to act. Think of the Inflation Reduction Act. Investors are thinking, well, what are going to be the winners and what are going to be the losers? The world is clearly going to change. It's going to go green. How do I make money in this change? Well, one of the ways to make money is I pick stuff that's less likely to be negatively impacted by policy going forward and more likely to be supported by policy. That's one. The second thing is what's less likely to be negatively impacted by climate incidents and more likely to prosper. There's a few variables here. So what we've tried to do is to come up with some guidance. The guidance that we've developed is around investments that are consistent with the future we've got to build. And these are science-based. This is not about governments deciding what they think they can do, which is what a national climate change plan is. It really is science-based. It's what the scientists say is what the future is. I've just finished doing a webinar for one of our partner agencies, the Inevitable Policy Response. Part of all this is inevitably going to happen, and investors believe that now, but it doesn't mean they understand the detail. So the guidance starts becoming important. So what we've done is we've rolled out a certification scheme. So investments that meet this criteria can get a marketing label to just basically cut down the due diligence for issuers, investors, governments, and so on looking at this. In other words, they do the due diligence for the whole scheme and they trust the label. And that's what's happening. But it's not the only way. I mean, the broader market, because only about 15% of the market is certified, the broader market, we still assess every single bond. We don't get a chance to do upfront prior issuance assessment, which is what our certification scheme does, which is, by the way, done by people like EY or KPMG or the like, or Assessment Analytics. They do an license by us. But we look at things post facto. And so we have a filter, which again is linked back to our taxonomy, our guidance, what is green. Of all green bonds and sustainable bonds issued to the market, we provide those data sets. It's called a curated data set to index providers, big fund managers. So there's a few things we do. Since we last talked, Deborah, the certification universe has grown. The taxonomy universe, which is broad guidance, not necessarily the very sharp delineation, so it's not quite as gold standard, has also grown dramatically. And we've been developing guidance for governments. So in the European Union, this work I've been doing, the platform on sustainable finance, is all about developing and guiding the European taxonomy and sustainable finance. That now is a regulation that all banks, corporations and investors have to report against annually. But also similar things in China, in Singapore, in Colombia, in India, in Australia, in lots of countries around the world. And that's helped underpin investor confidence in the market. And that's critical, a critical feature of making it grow. Because, figuring out what the right kind of agriculture is in terms of our climate targets is not a capability many investors have. And they basically, there's still how you make more money in a segment, but creating the boundaries of the sandbox has proven to be extremely useful.
Yeah, well, from one standard setter to another. Yeah, I can appreciate the contribution to market integrity, to investor confidence, and to the ethic of the in practice. So we're glad to see that evolve. So, Sean, you travel extensively all throughout the world, mobilizing capital for climate solutions through bonds. What are the things that are top of your mind now? Like, what are the types of conversations that you're having on and the issues that you're working toward?
Transitions. This is a narrative about how we shift from high carbon to low carbon has become the norm in places like East Asia, which is fantastic. It's also become the norm amongst regulators in Europe who are now mandating that companies have to have a transition plan, including oil and gas companies, to shift to help meet the Europe's targets, what country you're in. So that's one thing, and that we're doing a lot of work in that area and supporting it. The Japanese government announced last week it's going to issue climate transition sovereign bonds.
Okay.
From early next year, $10 billion a year equivalent. We're seeing more of it. So that's another thing, sovereigns. We're seeing a lot of sovereign issuance. There's nearly 50 regular sovereign green or transition bond issues around the world. That's a really cool development. It gets linked back to policy. But lastly, we're seeing policy. So, we're under no illusion that a nice market is going to change the planet. Really, with the kind of changes we need to make to risk climate change, we're going to need strong activist industrial and economic policy. Think of IRA on steroids, the Inflation Reduction Act. We're beginning to see that now. I mean, post-Biden Climate Summit, the commitment to 2030 emission reduction targets are sensed by investors that the world was changing, going to go green. They're going to have to now pick winners and losers amongst that. That plays into the green bonds, because green bonds are signals that organizations are making a change to become future fit. That supported the green bond market. But the other things governments are doing, like the IRA, like the Invest EU or the Renew EU program in Europe, like the GX Green Transformation program in Japan, these are major, these are huge programs which are developing, let's call it, credit-worthy investable propositions for investments which are green. So this, like the world economic supertanker, is turning. It's really fantastic. We're deeply engaged in many areas around that work in Europe and in Japan and in ASEAN and India and China. It's a work in progress, but it is definitely shifting. And you see it in some of the easy areas. Renewable energy policy, solar continues to drop 20% per annum in price. It's unbelievably cheap. We have Republican counties across the US dropping plans for gas plants and replacing it with solar because it's cheaper. It's incredible. Electric vehicles. We saw last year 20% of all electric vehicles in China vehicles sold in China were electric. This year it's already up to 33%. In Germany, 50% of all fleet cars were electric. So the US, it's about 8%, is way behind This is booming in other markets. This is already seeing a drastic change in terms of parts industries, auto, supply chain industries, green commodities, let's say minerals like lithium, but also nickel and copper and rare earths and so on. And of course, energy that goes with it, a push for green energy to fuel these has been driving demand, etc., etc. In every sector we look at, the latest is shipping. We've started seeing big shipping companies commission bioethanol ships to replace bunker fuel, and a whole bunch of them are looking at ammonia, green ammonia, to fuel their ships going forward to get out of bunker fuel. Or aviation, where in Europe, the sustainable aviation policy the Commission has brought in mandates that all airports have to provide at least 5% sustainable aviation fuels by 2030, and the European Commission will subsidise the price to make sure it's no more expensive than kerosene. So every airline's going to use it. Like the policy action we're seeing across the board is exciting. It fills me with hope. I mean, don't get me wrong. It's at the 11th hour. So it's a fine game here about how we're going to make the shift, but at least it's happening.
So is there enough capital to finance all of the transition opportunities and needs that that's kind of estimated, or is there kind of a surplus of capital and not enough opportunities to finance?
Oh, you hit the nail on the head there, Deborah. Look, the scale of capital we can invest is extraordinary. By the time this is finished, this would have been the largest investment boom in history by any measure, including percentage of capital deployed. McKinsey's estimates that on the mitigation side, we have to invest about $9.2 trillion per annum. That's a lot of money per annum. The US economy is about double that size, right, as a GDP. On top of that, there's the investments we need to make in resilience because climate change is coming in. So we've got to address things like coastal protection in Miami. God knows how we're going to do that. I had a long conversation with someone about it the other day, but also heat in southern US cities is becoming really serious, or in Uttar Pradesh or whatever. And then there's various other problems where it's economic, social, there's a lot to be done. A lot of capital to invest. That's the first point to bear in mind. The pipeline here is enormous. The good news, first good news, is that about 2/3 of what we've got to invest is not fresh capital, maybe 3/4. Not fresh capital, it's changing the procurement requirements of what we do already. Think of it as a building. You still got to build a building, which is now need to make sure that it's zero carbon and resilient, like thick walls that can keep you cool if the aircon fails. These sorts of things. That's just changing the procurement requirements. It's not particularly expensive. So you're redirecting current capital flows or making sure that water investments you make take into account changing rainfall patterns. Like, should be obvious, right? But it isn't. It's still something people are learning about. The other quarter to a third is new CapEx. Because we've got a CapEx lump, we've got a lot of high capital expenditure investments to make the trend. Think of solar farms compared to gas plants. Solar farms cost a lot more upfront than a gas plant, but their running cost is virtually nothing. So we save on OPEX, we've got to do more CapEx. So that's the CapEx lump we've got to get through, and that's for the next 10 years. But there's a bit of good news we have, which you're perfectly right to say. We actually have capital resources. We have more capital pools around the planet now than ever before in human history. We've been remarkably good in the last 50 to 70 years at accumulating and creating capital pools. Now, some of that's invested in the wrong place. I mean, think of all those bonds invested in negative interest rate Japanese and German bonds, right? Whoa, that's not a good idea. So there's a redeployment required, but we do have the capital resources. That fills me with hope. And in the last few years, we've proven that we give those pools of capital green stuff, they flock to it. The subscription rates for green fixed income are way higher than for non-green fixed income. Now, people have still got to meet the fiduciary requirements. They've got to pay your pension when you retire. So the leeway on pricing is tough. The real problem everywhere in the world is supply. Totally. Every investor I speak to. But it's not just the investors I speak to, it's also the issuers, the governments, the corporates, finding enough stuff that's green to be able to issue. Because what's absolutely the case is our plans to go green are so far behind that we don't have the ready-made things to invest in to make up that 9.2 trillion. Got to get our skates on. We've got the money, we've got the demand, we've got the instruments now. We just kind of need to get our corporate and business and government planning in order, right? Hey, it's a good place to be, but it's not ideal. Ideally, we would have solved that by now, but
How do you see that resolving? Are there a lot of small opportunities, like investments in startup technology that are going to be important, or is this going to be resolved mostly through large scale?
if you're talking about an economic and industrial change of the order we're seeing, there's going to be a hell of a lot of new opportunities in that mix. Not that it's all going to be new companies, the reality is a lot of it's getting bought up in big companies who've got distribution and so on. That's our capitalism. But whatever, there's a lot of opportunities there. Picking them is a challenge. Look, I don't really follow the startup space that much. And partly because it's a theory of change we've got, is that what drives investment in new ventures will be large-scale demand and offtake agreements and so on. So if you generate large-scale demand for clean energy, you'll be amazed at how many new ventures and startups suddenly get funding. Because you've got a great cycle in them, huge contracts being let, and people are now trying to figure out how to underbid each other in new contracts to lower the cost of capital to make sure they can stay at so on. One of the great innovations over the last 20 years has been the nature of bidding in clean energy, for example, the auctions that have been held. Every year we get a cycle of innovation, both technical and financial innovation, because, high capex, the cost of capital is everything. Putting those two things together has been a real of change, of new ideas coming through and changing of order of who's top dog in this particular change, because you've had large-scale contracting. And that sucks in the R&D and sucks in the innovation. And yes, there are a lot of opportunities, and that's, of course, what VC is all about, picking what the opportunity is going to be and making money on one and losing out of nine. That's the nature of it. But one thing you can be sure, there's a hell of a lot of change coming through, and that means opportunity.
So I saw you guys just released guidance for transition bonds on how to determine credible transition bonds. Am I correct in that there's no label for transition bonds, or is there now?
There's quite a lot of discussion in the European taxonomy of sustainable finance, what transition talks about enabling investments, think green investments or minerals for the green transition. There's green investments and there's transition investments, which are generally stuck with the goalposts, going to keep moving to get to where we need it to be. So think steel. We're not going to be able to get steel manufacturers to go green overnight. Some will. But if they're shifting in the right direction fast enough, we want to make them part of the story. That's the transition, if you like. So there's varied guidance developing. We've published guidance on financing credible transitions a few years ago. We've recently published guidance on how to assess transition plans, which in Europe are becoming mandatory, by the way. We're developing reference criteria for key transition sectors. We've so far published reference criteria for steel, chemicals, cement, shipping, property. We're about to publish energy utilities. Next year we'll do banks transition plans. So the idea is, if you're going to do a transition plan, you've got to have a sense of how ambitious it needs to be to qualify. That's got to look back towards our science models. Think of the IPCC models. Making that easy for people to understand is what we're trying to do at the moment. So there's a lot of work going on. And it's not just us. The regulatory authorities in multiple countries are wrestling at this. There are sister organisations like people will have heard of the Science-Based Targets Initiative or the Transition Pathways Initiative or RMI in the US. These are all friendly sister organisations that we're working with to try and come up with clarity of guidance. There's a lot to be done. But I'm going to say to everyone out there, don't worry, don't wait for the guidance. It's coming through. In some areas it already exists. But if it doesn't, do it anyway, because the world is going to change very, very fast from that one. Prepare. Look at the risks. Understand what the risks are in your industry as the world greens its economy. Like if you're in the auto industry and you haven't got a plan for how you're dealing with the electrification of cars, you're missing a trick, right? Like it's not rocket science. Well, that applies to actually every industry now. And also, in a lot of places, you've got to start thinking adaptation. To think of a toy manufacturer, well, one thing you've got to be thinking about is where your factory's sited. If your factories are sited next to Mar-a-Lago in Florida, you've got a very significantly heightened risk of flood and hurricane damage because these things are getting worse year by year. If you're sited up in Arizona, you're probably okay on that right, but you've got to make sure you're dealing with heat and the potential for the grid to cut out because when you get severe heat and you get stresses on the grid, will your factory be okay? Will the stuff you're storing survive a massive heat wave? It might or might not. Just at least ask the question. And that's transition. So we can get started on those sort of things while clearer and sharper guidance, which makes it easier for us all starts coming through.
So we have a few minutes left. I'm curious, is there anything that I haven't asked you that you would like to talk about that you're seeing out there?
I will say this, that for everyone listening, we're lucky. There is a incredible challenge still facing the planet. I mean, let's be clear. The freight train is still coming down the tracks. It hasn't stopped yet. And we're in the way. We haven't got off the tracks yet. So we've really got to, the change is happening, but hey, we've got to do a lot. The critical thing we have to do is to make sure capital flows to the right places, not just in rich countries, in emerging markets too. We actually kind of know how to do that because that's what we've been doing. In the US, that's what we did. Poorer states from richer states in the last 200 years. Public policy made sure capital went to the right place. That's what we've got to do globally. The G7 countries have got to band together. They are banding together to tackle this. And work of G20 and so on. We need the finance sector desperately. We need the finance sector to be focused on green, not just doing deals, which we also need, but advising governments on what they need to do to make sure capital flow. There's an opportunity here, big opportunity, to shift not just trillions, but tens and tens of trillions really quickly in the right direction. This is what really gets me excited at the moment. That's starting to happen. And I'm going to say, if you're in the sector, we need you to be successful. We need you to do more. And note that this is the main game. This is the chance. I want to say we're lucky. There's something we can do here. Most people, there isn't. Most people who's going to be takers for this stuff. They're going to have to survive. We can actually drive change. And that's why I'm working in the finance sector. That's why I think we have an opportunity. It's an amazing opportunity.
You mentioned advising governments on how to fund or direct capital. Is that advising them on how to structure debt for a shared risk burden or types of debt?
Yep, that sort of stuff. It's also advising them on regulatory steps they can take to de-risk the right kind of investments we have to make. It's advising them on how they can help knock heads together to aggregate demand. Think about getting the 3 big auto manufacturers in the US to start putting out large contracts for green steel. Every single steel company in the US overnight will have massive capex in developing hydrogen-generated green steel. There's just so many things the government do that are fiscally efficient. It doesn't need to be massive subsidies, although that's been fantastic with the IRA so far. But there's so much more we can do. But, they need to hear that from corporates and finance. They need to understand what's really going to make a difference to investment. And we need a dialogue. We don't make this change operating in silos. We only make this change. Just think about a wholesale renovation of the global economy if we have a close working relationship between the public sector that has the rules in its hands and tools like subsidies and guarantees and the like, the corporations who have to deliver and where the innovation lies, and finance is going to make sure that the money will still be there in 40 years so we can pay pensions, pay insurance policies. Bring those 3 together. Have a close dialogue about what's going to really make a difference here, and we've got a chance. And there'll be a lot of green bonds as part of it.
Yeah. I was going to ask you, what's next for Climate Bond Initiative?
Next, one thing that's next for us is around supporting governments. We published the 101 policy ideas for mobilizing sustainable finance, for example. There's more coming along those lines. 2 is extensions of taxonomy. Transitions I already mentioned. We started working on a climate resilience taxonomy, which is actually guidance about adaptation, physical adaptation, economic, social, health sector, biodiversity measures, all of which will reduce risk of default going forward if we can do it. So what does that look like? How can you tell? So that's the next big effort for us. What we're really talking about is how we manage the planet differently, right? And clarity about what works, bringing the science to bear, channeling the science is very much what we're working on now.
Sean, that's an incredible transformation from when we last talked in 2014 and you were tracking green bonds and labeling them and just starting out with the standards. It's incredible.
We're still doing that, by the way.
And the work that you're doing is, yes, you are. I just saw it's semi-annually.
Exactly. But this has always been the intent, but we need to prove and work first. And we've kind of done that now with the green bond and sustainable bond market. We've got to keep working on that. But now we've got the opportunity to do so much more. And we're not alone. We work with partner organizations around the world. It's collaborative. A lot of people put it in the right direction. The question is to collaborate, to be cohesive and consistent in what we're doing for the market, give a clear signal. And that's a big part of our work too, trying to pull people together, be part of the process of, I described it in a team meeting this morning, of making it easy for people to act, making it easy for investors, making it easy for corporations, making it easy for governments to act. The simpler we can make it, the faster people will act.
Yeah, well, I imagine the guidance and the standards that Climate Bonds Initiative puts out really goes a long way in boosting investor confidence in buying climate bonds and green bonds and all of the bonds in that space. So overall, I think the world is fortunate to have you and Climate Bonds Initiative working on this problem.
It's very kind of you say that.
Your website, climatebonds.net, is where listeners can go to get information on the climate bond standards. Thank you so much for being our guest today. It was a pleasure talking with you, Sean, and we look forward to catching up with you again in the future.
Thank you, Deborah, for the chance to talk.